video. If I find a short video, I will blend it in. And they are still profitable, making millions and millions and millions of. But the main part is obviously they scale in. So this really maximizes your profit, and you.
Like an addict, thicker than Andy Rick. I met the boy in a 6-bar.
In this video, you will learn how to be profitable with having a win rate of 5%. So I recently saw a video. If I find a short video, I will blend it in. Where basically a profitable trader, I think it was even an institutional trader, I'm not sure though. He basically told about that many traders, professional traders, got a win rate of like 5%. You have to keep, imagine like this is basically out of 100 trades, they win 5 trades. That's really not a lot. I mean, and they are still profitable, making millions and millions and millions of dollars per year. And the reason is not a big risk reward. I mean, yes, probably they got a 1 to 3 or whatever, but the main part is obviously they scale in. So I personally am right now backtesting for my strategy how to scale in, when to scale in, how to deal with a stop loss, whatever, because this really maximizes your profit, and you suddenly don't need a big win rate. Like you don't need a 60% win rate, whatever, because if you scale in heavily and obviously with good risk management in mind into your profitable trades, you can really maximize it, and all of a sudden you can make, out of the originally 1 to 2 risk reward ratio trade where you risk 1% to make 2%, you can suddenly make like 5%, 10%, whatever, if you scale in correctly. And obviously you can't, or you should not increase your risk from 1% to 5%, because this is stupid as fuck, and you cannot even do this on funded, on prop firm accounts without losing the account, obviously, because the drawdown rules. So you have to obviously develop and plan how to manage your risk while scaling in. So a few, ideas which I have, which I am right now backtesting, are obviously, first of all, you can move the previous stop loss to break even and a new trade risking 1%. So this is obviously a way. So the old position is basically break even, whatever, and the new one is still risking 1%. The second one is, if you don't want to, move the stop loss to break even, because it's not, sometimes it makes sense because of the market structure, but sometimes not. So if the case is you don't want to do it, then I have had the idea that you can basically just move the stop loss up and, calculate a new risk which you have on the old trade, which you are scaling in. And then, you basically just calculate the lot size on the new position. So you, in summary, you still risk 1%, but, in 2 trades separate. And this still can, increase your profits like big time, because you can really not only scale in 1 time or 2 times, you can scale in like 5 times. So for example, if you are a swing trader, but you don't really like to hold overnight, or the drawdown rules on prop firms are obviously not really made for swing traders, because you can lose only 5% per day, and on, I think, the majority of the prop firms, it's still based on the balance and not the equity. I mean, opposite, on the equity and not on balance, which means if we are like, I don't know, 5% in profit, and you hold a trade overnight and you wake up and the trade is at break even, or maybe a little bit in loss, then you lose the account because the drawdown rule. So this is the reason why I personally would not switch completely to swing trading, but still closing the profitable trades at the end of the day. But I basically have right now a very long trade, a very big swing trade, but I'm basically scaling in and out over the next days.
Let's go.